Jordan and Wyatt, if you guys want to, share a little bit about yourselves, feel free. Also, yeah, you guys are able to unmute yourselves. Perfect. I wasn't sure about that. Perfect. Hey, Wyatt.
Hey, what's up, Conrad? Thanks so much for having me. Huge fan of the Bitcoin Well team and product and offering. So pumped to be here. I think this is an important topic that we can't talk enough about. So I'm Wyatt O'Rourke. I'm founder of Basilic Financial. We're a state registered RIA in Colorado. So I kind of brand myself as a Bitcoin financial advisor. Basilic was built specifically to service Bitcoiners and Bitcoin wealth management firm. Also author of the Bitcoinization of Finance. I'm chief marketing officer and helped found The Space, which is our Bitcoin Citadel in Denver. And then also working with Jordan, we just hosted the inaugural Bitcoin for Financial Services Summit. And we're spinning that into a media company, and that's specifically meant to reach out to different financial services professionals and help them get accustomed to talking about Bitcoin, servicing Bitcoiners, and integrating Bitcoin into their practices.
Like White said, my name is Jordan Guest. I'm a CPA. I run a tax firm called Trusted Advisors here out of Kentucky. And then I am also co-founder of Bitmint, which is a Bitcoin and tax software, which we'll kind of get into the different problems that solves. And 2025 is a very specific year for some different unique problems coming up for any Bitcoiners that either did sell and sent the price down or are looking to potentially sell and capture some or harvest some losses to put against gains or other income. So I would echo what Wyatt said. We're big fans of the Bitcoin Well non-custodial solution for buying and mostly buying, but also selling if you need to, Bitcoin and Bitcoin only, which we really applaud them for that effort. And I'm happy to be here. I'm happy to talk about this. It's November 25th. And so it's kind of one of those perfect times. There's still plenty of time in the year to make changes going into this upcoming tax season. And I'll leave it there.
Awesome, Jordan. Thank you so much. I'm a Bitcoiner, so I understand buying Bitcoin, using Bitcoin, but harvesting losses, like putting a loss in the price of Bitcoin, like towards my taxes, like that sounds really cool. I'd love to hear more about that. I'm sure a lot of folks will. All right, we're at 7:05, so we're gonna begin with the presentation. For the folks who are in here on Google, as well as all the folks streaming, watching the stream, thank you so much for joining. We're going to be running this for about an hour, starting off with a presentation on what is Bitcoin, why is it better than normal fiat money, what is fiat money, and then we'll have the two presentations followed by a Q&A. So if you have questions, please save them for the end. We're going to be able to get them. If you're in the Google Meet, just throw them in the chat, and if you're on socials, reply or comment to the stream, and then we'll get your question in there. And let's get it. All right, so what is Bitcoin? Why are we talking about Bitcoin? Well, I'm sure everyone in the last couple of years has gone to the grocery store and had a double check at some of the prices for some of the food items and be like, why is this getting so expensive? Why is maybe my salary not increasing by 50%, but the price of groceries is increasing by 50%? What's happening there? We're going to talk about that. We're going to talk about why Bitcoin is kind of a solution that's actually going to really help you and prepare you financially for the future. The three main topics we're going to explore is inflation, also censorship resistance, kind of why you can send Bitcoin and why Bitcoin is kind of more powerful in a sense, why Bitcoin can kind of, go over some of the typical fences or walls that might block you from sending money or doing things in a typical economy. And then how is Bitcoin secured? What runs Bitcoin? Well, our typical society is run by people, and different people get put in charge all the time. But Bitcoin isn't run by people. Bitcoin is run and governed by math. And math, as we all know, math is constant. Like 2 + 2 will always equal 4. So we kind of have this incredible stability for the way that Bitcoin is governed and operated. And I'm excited to dive into all these topics with you. So inflation. This is a chart outlining the inflation of fiat money. When we say fiat money, we mean government money. It's not backed by anything. Government just print this and then say, you have to pay us your taxes in this. This is what you have to use. And they kind of there's a lot of kind of the economy has been kind of set up in a way to use their money. So that's kind of the only choice a lot of us have. And it's not a great choice when we look at this blue line, because this blue line shows the total quantity of dollars. And it's not a coincidence that we saw a massive increase, almost a doubling in the amount of dollars in the last 5 years that coincided with a near doubling in prices of a lot of things like grocery store items, homes. A lot of items have become so expensive lately, and it's because we have more dollars. It's not because these things have become more valuable or more expensive. Like, for example, if we all walked into a grocery store, each with $1, say there's 50 of us here, we could, and there's 50 apples, and we all buy an apple for $1. But if we all walk in the grocery store and there's $50 and we all each want an apple, well, what if we all have 1,000 of these dollars? Then like all of a sudden these apples are going to be sold for hundreds of dollars. Does that mean the apple itself was actually like worth way more, or whereas dollars just printed making each individual dollar worth less? And that's basically what is happening. Money is being printed and each dollar is worth less. And as you all know, inflation does not help you. So why do we have it? Well, it's because inflation actually helps the government. The government has a lot of debt. The government likes to spend because it lets them to do things and then get people to vote for them. But that means that you're paying for it, not just in your taxes, but in the currency that you use losing value because they're printing money. So how does Bitcoin compare to this printing of money? Well, Bitcoin's chart looks a little bit different. Bitcoin's chart doesn't continuously go up and up and up and up. It goes up and then it gets flat. And another interesting thing about the chart of the total amount of Bitcoin that exists, we actually can see into the future. And that's why we know what the supply of Bitcoin will be in the future. We know that Bitcoin will be 21 million Bitcoin in the future because Bitcoin has a different way about going in inflation. The amount of Bitcoin that's produced every day, every week, every year is all predetermined and actually agreed upon by everybody that uses Bitcoin. So we know that this isn't going to change. We actually have a lot of stability in the amount of Bitcoin, whereas with fiat currency, there's no stability. All of a sudden, the amount of money will just jump up. And next year there might be a reason someone might come up with a reason to make more money and then create more inflation. So that's one of the things that's different as well about Bitcoin in terms, not just that its inflation is different to fiat currency where Bitcoin is scarce, but Bitcoin actually tells us the future. Like we know what Bitcoin's going to do in the future. We don't know what's going to happen to these dollars in the future. Right? So that's why you've heard maybe some Bitcoiners say 1 Bitcoin equals 1 Bitcoin, because we always know how many Bitcoin will be and your percentage of the total Bitcoin will always remain unchanged. Censorship resistance. Okay, so I'm assuming many of you have gone into a bank in the last 2 years and want to withdraw, $3,000, $5,000, $10,000, maybe for some home renovations, maybe to buy a used car. And then the bank is like harassing you. They're like, why do you want this money? Or we don't even have this money right now. We can't give it to you. And that's like your money. And there's a lot of other ways where the way that you use your money can be interrupted. We had the Canadian truckers protest happen a few years ago here in Canada. If you donated just $50, your entire bank account would have been shut down by the Canadian government, affecting your ability to basically do everything. Because in a highly financialized economy, if you're not able to spend, you're not able to participate in the economy, you're kind of just like turned into a ghost. And that was basically what was happening. And if we look into the past, deeper into the past in America, in 1934, you had Executive Order 6102. This is when the president said, you know what, our economy is in the gutter. We need to take everyone's gold to spend money and kickstart the economy. And while that may have seemed like a valid justification, it ended up taking gold away from all the people that worked hard to hold on to it. They gave them some extra dollars to buy their gold, and dollars lost 99% of their purchasing power over the last 90 years, whereas gold went from $35 an ounce in 1934 to over $4,000 an ounce today. If all those people had the ability of hindsight, they wouldn't have wanted to give the government their gold. And this is one of the problems too with our traditional banking system, is that the money's in the bank and the government can write one law and take money or take assets away from you. They've done it before and they can do it again. All they need is a justification. With Bitcoin, you cannot take away anyone's Bitcoin. No one controls Bitcoin. Bitcoin is decentralized, meaning there's not like one person in charge. It's kind of like everyone is equally in charge, which means there's like no one. Like I would talk to the boss and they'd be like, hey boss, turn off their money or give me their money. And the boss would be like, okay, I have to. But there is no boss. There's no one you can talk to. There's no one in charge. So there's no one that you can persuade to take the Bitcoin away. It's just governed by code that everyone all agrees to operate together. And this makes it so that you can't have your money taken away from you. And because you can send money to anyone you want and you can't have your money taken away from you, Bitcoin is actually the most valuable financial tool for freedom, because it's truly the only property that you can actually own without it being taken away from you. Your land, your financial assets, your home, any of these things with justification from the government can be taken away. But Bitcoin, locked down in a cold storage wallet, cannot be taken away by anybody, by no government. So it truly enables you to have unrivaled freedom. And how do I know all these things? How do all of us Bitcoiners know all of these things? Well, it's because we can actually see Bitcoin is incredibly transparent. It's just a bunch of software that everyone voluntarily downloads and agrees to operate, and everyone sees what they're running. And I know code may seem a little bit scary. I'm not the most technical guy myself, but when I look at this, I'm able to see block subsidy 50 per coin, and block subsidy is cut in half every 210,000 blocks. If you remember the chart I showed you saying that Bitcoin, there's only going to be 21 million Bitcoin in the future, this is actually the code that explains that. And we know that the amount of Bitcoin produced every 210,000 blocks will be cut in half. And for Bitcoiners, we call this the halving, where the supply is immediately kind of altered. And this happens about every 4 years. And this is all expected. We all know that this is going to happen. This is how we all work towards our 21 million supply. And at the same time, Bitcoin isn't like a dollar where there's only, like, if we said only $21 million, like, how would we all use that? Like, a dollar only has 100 pennies. That's not enough for every person in America, let alone every person in the world. Well, Bitcoin has 100 billion pennies, or Satoshis. That's what we call a fraction of a Bitcoin. And we can add more of these decimals if we want to, just to make Bitcoin even more usable. We don't need to have more and more Bitcoin continuously being made. We can just continuously divide the existing Bitcoin we already have to support every economic function that we'll need. Because Bitcoin is highly divisible, highly transferable, so you don't need a lot of it to start already being able to use it on a functional level. And as I kind of touched on this before, but this same math that governs how Bitcoin is used and your freedom to send it also governs your security. No one can take your Bitcoin. Bitcoin wallets are backed by an unhackable encryption that nobody can get through, only the people that control the private key, the owners of the Bitcoin, so to say. So in this sense, we have the freest money that's scarce and guaranteed to protect and preserve your value, especially in comparison to the melting fiat ice cubes, as Michael Saylor would call it. And we know through math that this is going to remain unchanging. You don't have to worry about some new CEO of Bitcoin getting elected and changing all the rules for their benefit. We know that Bitcoin is designed for the people and it's governed by the people, and that's why it will always stay pretty much the same way that it is. Buying Bitcoin as well is incredibly easy. You can't just walk into a home and walk into a bank and buy a house. Like, it's very expensive. You need a lot of debt. You can only buy one house. You can't buy like a 1/10,000th of a house, but you can buy 1/10,000th of a Bitcoin. You can buy $20 with a Bitcoin. In Canada, United States, you connect your bank, send dollars across. We automatically convert those dollars into Bitcoin. We never hold on to your Bitcoin. That's one of the things that makes Bitcoin Wallet unique. We do not hold on to your Bitcoin. You're in full control of your Bitcoin. So all those previous things I described of, Bitcoin being censorship resistant, you're fully in control. Bitcoin is a tool for freedom and independence. You get a benefit from those things. If you leave your Bitcoin in a Bitcoin bank, like a Coinbase or like anything like Coinbase, where they hold on to your Bitcoin, you're giving up all those all those freedom tools, because like a bank, you have to ask for permission to use your Bitcoin. Well, that's kind of already setting you back. That's kind of removing the purpose of why Bitcoin was invented in the first place and the value that it offers to you if you hold on to it. So you want to hold on to Bitcoin yourself. And a great place to start doing that is through Bitcoin Well. If you want to buy small, that's the best way that we recommend if you're new to Bitcoin and you just want to get set up. But if you have a lot of confidence in Bitcoin, you know that Bitcoin is the best tool for you, for your financial savings, for your financial future, then you can meet with our Bitcoin Well Infinite team. Many of you answer the question as to whether or not you're interested in this. Those that were, I'll reach out to you. We'll follow up with you after this presentation, see if you'd be interested in meeting with our Bitcoin Well Infinite team, because the Infinite team gives you a white glove service for buying Bitcoin. We make sure that Bitcoin is safely arriving to your wallet. We'll go through large purchase strategies with you, and then as well, if you're purchasing this much Bitcoin, then folks like Wyatt and Jordan are going to be incredibly helpful for you getting the most out of your Bitcoin and getting the most of your Bitcoin strategy, or even maybe reevaluating and improving your Bitcoin strategy. So, there's definitely a lot of ways that you can get the traditional help or assistance that you've been getting in the traditional financial sector, but with Bitcoin. So that's, yeah. So I think now we can, quickly summarize. We're different because you send dollars and you buy real Bitcoin. You don't have a balance. You don't like look at Coinbase and see how many Bitcoin they say you have. You look at your wallet. Your wallet's connected directly to the Bitcoin blockchain, the ledger of all the Bitcoin transactions, and it tells you exactly how much Bitcoin you truly have. So that's Bitcoin. That's Bitcoin well. Jordan, love to hear about how we can leverage our Bitcoin even further.
Yeah, Conrad, thanks for
here.
Yeah, thanks for giving us that tee up. I think it's always important to just make sure everyone's aware of what Bitcoin is, why it's special, and there's been big breakthroughs and in the tech ever since 2008 or 9. It's one of those, right? It's a while back, and now when we're talking about Bitcoin, like you said in your presentation, it's not this super niche, internet nerd thing anymore, right? BlackRock has entered, Chase Bank is in. There's all these bigger institutions getting in, and then of course now people are adding it to their portfolio. And it's important to jump on calls like this when the price does do what it does, right? Where it's volatile either to the downside or upside, and understand exactly what you hold so that you don't panic sell. Actually, you use this opportunity to potentially purchase more, not financial advice, which we'll get to in just a second. So, like I said, my name is Jordan Guest, CPA. Tonight, I'm going to be going over just some Bitcoin tax essentials. There's been some rule changes this year specifically, so we'll kind of go through what those look like. And like Wyatt and I always love to do this. I'm sure Wyatt will have his own special disclaimer, but it is important to put this up on the screen that this presentation is for educational purposes only. It's not tax, legal, accounting, investment advice. It's general in nature and may not apply to your specific situation. And so before taking any action, make sure you consult with someone specifically who's a qualified tax professional. They can review the details of your specific circumstances. Nothing in this presentation creates a CPA-client relationship, and no guarantees are made regarding tax outcomes. Now that we have the fun stuff out of the way, so I just want to get into why do Bitcoin taxes matter, and specifically this year. So Bitcoin is not currency. So it's when you go to the store and you spend dollars, that does not necessarily create a taxable event, right? Because that is it's fiat currency. It's government ordained. They're not going to create this impediment for you to go spend your dollars. But in 2014, the IRS in the United States came in and deemed that Bitcoin digital assets are to be treated as property. And so it's the same way if you were to sell Apple stock or sell a piece of real estate, you have to recognize either a gain or loss on that. And over the years, there's been tons of confusion on exactly how you calculate that. It's been a bit of the Wild West because, like Conrad said, there's no central authority that's actually tracking your Bitcoin for you for the most part, especially if you're moving your Bitcoin across different wallets, exchanges. Whereas normally people are very used to, hey, I trade inside of my Charles Schwab account, my Fidelity account, and that entity sends me a 1099 at the end of each year, which for the most part, there's exceptions. They will show, here's all the lines, the proceeds that you got for each of those trades, and then the corresponding cost basis, short-term, long-term, if there's any special, treatment of those specific lines. You get that in a report, and then you take that to your tax preparer, or you take it to a TurboTax, something like that, and that goes into your tax return, right? With Bitcoin specifically, no one is doing that for you, broadly speaking, unless you are using just one exchange and they're custodial. They are holding all of that Bitcoin on your behalf, or like a Robinhood type of. And there's trade-offs like Conrad just explained, right? Where there's a lot of circumstances where you actually do not want to rely on a third party. One of the beauties of Bitcoin is that you can take it into your own self-custody. But when you do that, it creates this new, I would call it a bit of a burden of the reporting. And especially in 2025, the specific lots that you choose to sell are going to drive potentially dramatic differences in your tax liability. So we'll get into that. So what changed in 2025? So the IRS basically, they elevated the scrutiny of the digital assets reporting. You will likely see some new reports coming out of different exchanges if they're if they're up to speed on all the compliance that are called 1099 DA, which stands for digital assets. And that is a specific segmented report that shows the sale of digital assets. So be on the lookout for that. And everyone, it's very simple to calculate the proceeds, right? Hey, I sold one Bitcoin a month ago. It was $110,000, whatever it was, right? That was the USD value that I got out of that trade. Where it gets a bit more complex is, well, what did I get that Bitcoin for when let's just say when I bought it? Of course, you could have been paid that Bitcoin. You could have mined that Bitcoin using an ASIC. But for simplicity, like say you bought that Bitcoin a year ago, and then now you're selling that Bitcoin now. But maybe you are like a lot of Bitcoiners and you buy on a regular basis. Maybe you buy weekly or monthly, or maybe you're one of those psychopaths that you buy hourly. That creates, each one of those purchases creates a new lot. And what changed in 2025 is the IRS came in and said, hey, look, the default cost basis method is actually going to be FIFO, which is first in, first out cost basis method. So essentially it's forcing you to, if you take the default route, sell off the lowest cost basis lots first before you get to those higher end cost basis. So what it does is that creates a bigger difference because your taxable gain on your Bitcoin sale is what you sold it for minus what you got it for. The difference is either a gain or a loss. So you can see like what you subtract off there. If it's older Bitcoin, lower cost basis, that's going to create a bigger gain, which we'll get into. If it was potentially Bitcoin you bought, like I said, like a month ago or a month and a half ago when Bitcoin was higher, well, you wish you could use that lot because that create either a smaller gain or a larger loss. But if you don't do it right, you actually might shoot yourself in the foot. So I wanted to also just kind of show, here's like what is tax lots. Because again, people deal with this in TradFi world, but really from a high level because someone really is doing that reporting on their behalf at one of these third-party institutions. So like I said, each time you purchase Bitcoin, you create a distinct tax lot. And I just would have you think about that as like its own unit with its own identity for tax purposes. And so it's what you paid in USD value and then the holding period. So the difference between when you bought it and when you sold it, that also comes into play. So like I said earlier, FIFO, first in, first out accounting can dramatically overstate your gains and increase your tax bill unnecessarily if you're not careful, which is one of the big reasons I was excited for this presentation tonight. So let's talk about the other option. So the IRS has come out and said that you can use specific identification as the alternative cost basis method. And what this is essentially about is that if you are maintaining enough detailed records that includes the purchase timestamps, the different wallet addresses, the exchange confirmations, and then the lot level acquisition data, you can actually go in and pinpoint exactly which cost basis lots that you are wanting to use to apply against your Bitcoin sale. And that's very important. Again, say you had to sell some Bitcoin to fund your lifestyle. You wanted to upgrade your home. You wanted to send a kid to college or take a vacation. Some people would say you're short Bitcoin, but that's okay. But those things come up, right? And then we'll get into this loss harvesting piece where people are selling Bitcoin and within a reasonable amount of time, they're actually buying that Bitcoin back and creating a loss there. So we'll get into that. But if you do it the wrong way, you actually might sell some of your older cost basis Bitcoin, create a gain for yourself, and really shoot yourself in the foot if you were planning to be able to take that loss. So let's get into the tax loss harvesting for 2025. So of course, Bitcoin's price volatility, it does create some unique opportunities. And actually I just authored an article that the Bitcoin Well posted maybe yesterday, I guess. Yesterday was Monday. So yeah, and just kind of showing that Bitcoin is actually not subject to the wash sale rules that apply to securities and stocks, because under the IRS subsection 1091, it is not explicitly laid out as being one of the asset types that are covered in wash sales. And there's been some hubbub actually online about, oh, well, the IRS is going to potentially still try to come after you and disallow those losses. I'll make sure that Conrad shares the article. We actually just posted an article yesterday on our Substack that shows precisely why we disagree with that position entirely, and that 1091 is explicit. And you can go back to even the late 80s where IRS tried to go after a taxpayer who sold an option contract at a loss and repurchased it almost immediately, and was allowed to take that loss because options at the time of the trades were not explicitly listed in 1091. So, but yeah, all this to say is, like, if you bought Bitcoin, let's just say worst case scenario, you bought the top, you were so excited. Someone told you about Bitcoin, you got in and you bought it 125,000. I think I actually have an example. Yeah, real world example. So you bought in, you had two different lots here. So you had one at 100, one at 125, and the current price is 90. I think it's a little below that right this moment. But you can see selling the different lots creates a different result, right? If you sell lot A, you create a $10,000 loss. If you sell lot B, you create a $35,000 loss. And so, and what I want to make sure I really hone in on here is these losses are capital losses. So generally, those can be taken against capital gains. And then if you have an excess of losses relative to your gains, you can take a maximum of $3,000 loss in a given tax year, and you can roll the rest of it forward into future tax years. But you can see even in this difference, if you sell the wrong lot, or if you identify the wrong lot, or you use the wrong cost basis method, you could actually miss out on a potential larger loss just by having your records in place, really, is all this comes down to. That would be more beneficial come the April 15th deadline. So these are the big kind of mistakes to avoid. Like I've kind of talked about, the default FIFO reliance, making sure that if you are in a camp where FIFO would be much more like just worse off to take that cost basis method versus specific identification, making sure that you are set up to take specific identification, working with your accountant, your tax preparer to actually mark that down. And then also this missing documentation. If you don't have your records in a place that is actually organized, and you can show, hey, here's the actual Bitcoin as it hopped from where I first got it to where I sent it, and then I sent it back here to sell. If you don't have all that mapped out correctly in the proper documentation, the IRS could come back and say, hey, we're going to disallow the loss. Like I said, the poor tracking across the platforms. And then the last piece is the data loss risk, which a lot of people nowadays are not near as worried about. But if you go way back, even not even that far back, like 2016, 17, some of the exchanges that were custodial at the time, they actually went out of business, or they shut down their US-based operations, went offshore. And so the IRS is actually coming after some of these folks to say, hey, prove your cost basis. And they're saying, well, I wish I could, but the exchange that I had all of my data on, they're not in existence anymore. So, and I didn't save the PDFs, right? And so all the more reason really to be using a product and service like Bitcoin Well. And of course, I'd love to give you guys a quick plug for a software that we developed alongside two other software developers. It's a company called Bitmint. I'm one of the co-founders of it. And we made this tool specifically because on the accounting and tax firm side, we identified this as a real pain point where customers were having an extremely difficult time tracking all their different tax lots across their Bitcoin holdings. having Bitcoin bank statements, and if they were a business that was accepting Bitcoin or mining Bitcoin and in treating, or I guess incorporating the USD value of those revenues and expenses alongside their USD bank accounts, credit cards. Think about Bitmint as you could use it to track everything for accounting purposes, as well as cost basis and tax reporting. And of course, if you have a business that has Bitcoin incorporated into it, think about it as a QuickBooks replacement that gives you a P&L balance sheet, as well as tracks your cost basis lots and your tax reporting. And one of the big things that we've been working on this year is making sure that as we go into the new year, that our customers are ready for that specific identification cost basis method, and they have the documentation in place to either give us on, as if we're doing the tax return and we can keep it in those work papers in our office, or if another tax firm is going to be doing that tax return, that they have the work papers that they need in case of an audit or a letter that the IRS sends out asking for more details. So, all right, I know it's a lot, and I wanted to make sure I went first because I know taxes are not super sexy. Next steps, make sure you are tracking your lots accurately. Review your 25 activity. If you either sold or you're planning to potentially take some Bitcoin off the table and put it right back on the table to reset that cost basis. And then, feel free to follow me on X, LinkedIn. Doing my very best to put out content that's helpful and partner with trusted names in the space like Bitcoin Well and Wyatt over at Basilic to put out just really good content for folks. You can scan this QR code. This takes you to the Bitmint website. You can check out the tool there, and then you can also schedule a demo if you're interested. There you go. Thanks so much.
Thank you, Jordan. All righty, Mr. O'Rourke.
Great job, Jordan.
Thank you.
Excellent. Yeah. So no, that was great. And yeah, taxes, not super sexy, but important. And so, closely related to taxes is finances. So, I'll start with my disclaimer as well. Not financial advice, educational purposes only. Thoughts and opinions are my own and not that of my firm. So like I mentioned, off the top, Basilic Financial is a Bitcoin-focused wealth management firm. And, it's kind of funny. When I started Basilic, I was already Bitcoin maximalist. My peers are maximalists. And so I really wanted to found a company within the principles and ethos values of Bitcoin. But I was a little stuck at first because my skills and experience are in, traditional finance. I was like, oh, shoot, I can't code or anything. How do I start a Bitcoin company? And it's actually not too hard. You actually take an existing business model and you just incorporate Bitcoin into it. And so that's what I did. I adopted the RIA business model, as we refer to it in the States. Simplicity, can think of it as a financial advisor. And it's kind of funny too, because Jordan and I talk about this all the time, where Bitcoiners have a little bit of a disdain for professional services, and rightfully so. I get somewhat frequently, less so now that we've been able to prove out some value. But folks are like, why Bitcoin? What do I need a financial advisor for? And so we've put together this presentation, and what a lot of our clients come to us with is, they're already sophisticated Bitcoiners. They've stacked sats, and now then the now what stage, and we help them with the now what. And so we're kind of going to go through a handful of Bitcoin acquisitions and utilization strategies, and this is really incorporated in how we make our Bitcoin work for us. And we kind of lead with a human first approach. We work hard to identify our clients' goals and what's most important to them. And if I do have one gripe with Bitcoiners, it's making Bitcoin an idol, and it's a tool, and we need to view it appropriately. And these strategies really kind of help frame the context of using Bitcoin as a tool here. So yeah, kind of touched on some of my experience in the industry. Bitcoin is something I take very seriously, have a great passion for, and it's a pleasure to be able to work in it. So we'll kind of start off easy. Conrad and Jordan did a great job on identifying ways to purchase Bitcoin and the importance of purchasing Bitcoin. So there's a few different strategies we can take depending on your goals. So what I most commonly recommend for well-established Bitcoiners or people looking to get into Bitcoin or start a position in Bitcoin is this dollar cost averaging. This is what I personally do. I think this is the the tried and true, and so this is where we're purchasing small amounts of Bitcoin over time. If we do feel like there's a good buying opportunity in the market, or we come into some cash, you can certainly do a lump sum strategy as well. All these comes with different types of pros and cons, and it's important to identify what you're trying to achieve out of your purchase strategy and adopting the one that is most appropriate for that. We could do periodic purchases, flexible buys based on revenue cycles. Whether this is you maybe have a cyclical business, maybe you're selling consumer goods, so you get pretty flush around this time, Q4, and so you're really kind of basing your buys based on your cash flow constraints. The last two are a little bit more geared towards businesses, but there's time weighted average price, which is very similar to DCA, but you've actually set consistent time interval, and then volume weighted average price. If you're looking to make largest purchases, you're kind of buying into strong volume. And so again, it's ultimately want to keep it simple. DCA, tried and true, nothing beats it. If we want to get a little bit more strategic, you certainly can. Debt is an interesting question. I certainly am sympathetic to some of the moral qualms people have with debt, but again, viewing it as a tool, there are different debt instruments we can tap into to either leverage and utilize the existing Bitcoin we have, or use different assets as collateral for debt to acquire more Bitcoin. What most, especially older Bitcoiners have is idle home equity. And there are actually a lot of exciting developments within the Bitcoin financial services industry at large, but kind of specifically in this realm. In the US, there's two companies, Horizon and OrangeBridge. They've actually developed products specifically made for Bitcoiners to access this idle home equity, to purchase Bitcoin in very unique and interesting ways that can mitigate some potential debt service on a recurring basis. So those monthly payments, depending on what you want to do, they could take ownership in the home. When it sells, they share in some of that upside appreciation. You can be very flexible. But moral of the story is, if you do have a lot of home equity, you can generally get a fairly low interest rate to purchase Bitcoin. And when we're doing financial plans, we model 25% compound annual growth rate. And so if you're getting 6% on your home equity line of credit, that could be an advantageous buy, because the spread of your Bitcoin appreciation is much larger than your debt interest. Bitcoin collateralized loans, this is something we're helping clients out with a lot lately. We're getting a lot of inbound interest. I'm particularly bullish on this subset of the financial services industry, just because debt markets are important infrastructure to financial plumbing. And so what we're really seeing here is kind of like Bitcoin collateralized debt getting built out. It's my kind of long-term thesis that the interest rate on Bitcoin collateralized loans will kind of become like the new risk-free rate, which is kind of most commonly in traditional finance represented by the U.S. Treasury 10-year T-bill. And so this is really kind of an old structure, an old concept applied to Bitcoin. So you have an over collateralized loan, and most commonly in the marketplace we see a 50% LTV ratio. So that's 50% loan to value. This can also be represented as 200% collateral to principal. So just using a easy $100,000 Bitcoin price, if you pledged one Bitcoin worth $100,000, you can get $50,000 in cash. You can use that cash to service your dollar-denominated liabilities. You can use that cash to purchase more Bitcoin. Depending on what loan servicer and originator you want to go with, you can structure the loan to be either paid back incrementally. You can structure the loan to be paid back interest only. There's something called a bullet loan, where principal and interest are due at the end of loan. We have some clients utilizing those strategies and then rolling the loan over. So at the end of a 12-month term, they pull out a new loan to satisfy the old loan and kind of keep the cycle going. This has become a really popular strategy. Mark Moss is really, I would say, kind of the flag bearer, on the strategy, and all debt instruments, kind of in general. It's kind of this, philosophy in wealth management with the, wealthy don't sell their assets, they borrow against their assets. These are all tools that we can use to do that. We have equity collateralized loans. If you have equities in a traditional brokerage account, you can borrow against those assets. You can also, a little less common, but maybe available to you depending on your employer 401k plan. So you can actually borrow against the assets in your 401k, and there's some interesting benefits, pros and cons that can come with that. But it's like, okay, what's our existing asset base? Can we borrow against it? And does that borrowing help us either satisfy existing dollar denominated liabilities or purchase more Bitcoin? Another way we can view our existing portfolio is our asset allocation. There's two main things we could really kind of do here to leverage acquiring more Bitcoin. We can rebalance that portfolio depending on what type of account. The US would be like tax deferred accounts, like IRAs or 401ks. All these come with different potential tax consequences, but we can shift portfolio weights from stocks and bonds into Bitcoin, or we can just sell holdings outright and use that to purchase more Bitcoin. Lifestyle, this is something we're seeing more hardcore Bitcoiners adopt. Living on a Bitcoin standard allows you to do a lot of flexible things. I try to do this as much myself. I have some clients they actually use like Strike as an example. They convert their paycheck from dollars to Bitcoin, pay off their credit card at the end of the month, that sort of thing, and you're ultimately getting more sats than you ultimately would otherwise. Is kind of a long-term bet you're making. There's also some very cool Bitcoin rewards programs. This is kind of most famously made popular by Fold. There's some also some other different debit card companies where you can use your Bitcoin to purchase debit cards that you would otherwise have sold for cash or use cash to spend, but you get a little Bitcoin back in the meantime. And then there's a handful of different investing strategies, and I really kind of call this the diversifying within Bitcoin. And so what we see very commonly with our clientele is that they're Bitcoiners. They want to be exposed to Bitcoin, but it's very hard to make a yield on Bitcoin. I've seen it a couple legitimate ways. 99% of the time, if somebody tells you they can make a yield on your Bitcoin, you should run as fast as you can the other way. That being said, there are some very unique and interesting tools that are developing, products that are developing in the marketplace. And so one of those options is Bitcoin-backed lending markets. We kind of talked on briefly in the dynamics of Bitcoin-backed loans. You can go to a peer-to-peer marketplace like Devify or Firefish and actually invest dollars into those platforms to be the dollar liquidity for somebody pledging their Bitcoin as collateral that wants to receive dollars in return. This would be a yield on dollars. It's dollars in, dollars out. But ultimately, you are making some sort of like fixed income with Bitcoin being the underlying collateral. Bitcoin native private credit funds, doing some work in this category as well. This is essentially the same thing, but on a larger scale. So you actually have an institutional partner that is creating a fund that you as an accredited investor can buy into, and they can be that dollar liquidity provider to different sorts of servicers and originators. You're generally going to get a little bit more favorable rates given what they're bringing to the marketplace. There's also Bitcoin-backed whole life insurance. The company most prominently doing this is a company called Meanwhile. So you can actually, fund your policy with Bitcoin. The whole company is fully denominated in Bitcoin. They generate a Bitcoin-denominated return, and as you're paying those premiums, your heirs will get paid out Bitcoin in congruency with the policy. And then there's Bitcoin investment funds. And so these are actually funds you're investing your Bitcoin into, and they are allocating that Bitcoin to earn a return. This is kind of most commonly done in the futures marketplace, but there's companies like Samara that are fully denominating their funds in Bitcoin as well. So Conrad did a beautiful job talking about this in the beginning. And while it is exciting about theorizing and strategizing how we can, make our Bitcoin work for us, at Basilic, we really focus on sound money strategies. And so 99.9% of our time, our clients are going to have Bitcoin exposure via a digital bear asset. It's very important to us that we take custody of our Bitcoin for the following reasons. And, this is kind of recap from Conrad, but we don't want counterparty risk. We want to be fully sovereign individuals. We want to be uncensorable. We want to opt out of a corrupt fiat system. And so this all really centers, and we're only able to utilize these Bitcoin strategies, investment strategies, if we're in full control of our Bitcoin wealth to start. I generally do this, and we do this with our clients via collaborative multisig. We leverage a partnership with Unchained, which I think is a premier, Bitcoin financial services company in the United States. They've developed a phenomenal, wallet software that allows you to be in full control of your Bitcoin. You can either do this by holding 2 keys. Unchained will always have 1. We offer key agent services in which, we will actually hold a key in the quorum, or we can get you exposure to multi-institutional multi-sig. But regardless, we're really here in this, green of green zones in this 2 of 3 multi-sig, and we're being very strategic with how those keys in the quorum are delegated and held. This is of particular importance when it comes to inheritance. Obviously, I think, one of the main reasons I'm a Bitcoiner is because I do think it can be generational wealth, and my heirs stand to benefit from the Bitcoin I've managed to accumulate. And we have to understand that being a digital bear asset that we're in full control of, it has some nuances as opposed to just the stocks and bonds in your equity, trading account. We need to make sure that your heirs either can sign a Bitcoin transaction, that we have, potential different trust structures in place to avoid probate and outside prying eyes, knowing how much Bitcoin we have. So this is, making sure we're taking account our privacy and our heirs' privacy, and then ultimately utilizing a professional that is, Bitcoin native to make sure your Bitcoin gets to its intended place. And we really kind of frame this in the context with our clients in it's called the noblesse oblige, which is French. If we have any French Canadians, I apologize for my lack of speaking French. Which means nobility obligates. And we're the first generation of Bitcoiners, whether we like it or not. And so it is our responsibility and our duty to make sure that Bitcoin is stewarded not only well, but can be stewarded well for generations to come. And this is only possible if we do the due diligence and take the necessary steps to make sure that Bitcoin is protected properly. We offer 4 different services. We set our firm up a little differently. It's a little bit, a la carte, so you can pick and choose which are most pertinent services to yourself and your needs. A lot of financial advisors will just bundle those all together. We also Bitcoin financial services, financial planning, portfolio management, and retirement services for small business. If you scan that QR code, you can book a free consultation. We'd love to chat. That's all I have, Conrad.
All right, wicked. Thank you so very much for that, Jordan and Wyatt. That's you guys got a lot of educational info and a lot of ways that folks can move forward. I'll just quickly throw up one last item here. So yeah, we are now officially in the question and answer period. We'll have our crushing moderator Uli help deliver us these questions to make sure that all of you guys are heard, especially you folks there on Twitter and YouTube. Everyone is going to have the opportunity to have your questions asked, and also for the folks that already got their Twitters up, why don't you give us a follow if you haven't already, and then also give Jordan and Wyatt a follow. We got them up on the screen there. And yeah, we'll have this question start coming in. We should hear from our pal Uli in just a moment.
All right,
Let's
guys.
see. Hey, there we go. Hey, Ellie, how you doing?
Perfect. Thank you so much, Conrad. Guys, that was an amazing presentation. So just to start off with the Q&A, what are the most common tax mistakes people make when it comes to Bitcoin?
I would say the most common is just not getting started early on tracking. You know, they assume that the same reporting they're going to get or they've been getting from other financial institutions. Well, yeah, and I agree with that, Trevor. Yeah, just don't sell. That makes it easy. Of course, we work with people who might be trading or might be actually, like, I know some people who they keep most of their business treasury in Bitcoin. So in order to make payroll every week or every 2 weeks, they're having to end up selling. But so there are all kinds of reasons, right, why you might sell some of your Bitcoin, but it really comes down to tracking. And some people get to a point where it's the classic, like, clean your room kind of every week or every day so that you don't get, 6 months down the road and you're like, I've got such a mess that's so, unattainable in terms of fixing that I'm just overwhelmed. I would say, I guess I probably have a bias, but try to find there's more and more CPAs. Wyden and I are doing our best on trying to onboard as many traditional CPAs into the Bitcoin ecosystem as we can. If you have a CPA that is you really like him or her, like, send them over to us if they have any questions. But I would say work with your CPA on nailing down a process for tracking your lots. And then even someone like Wyatt, right, who is helping you actually with those acquisitions while they're not, doing the reporting for you, at least setting you up with the tools for you to succeed. Because if you're like trying every single exchange that's ever popped up and trying every wallet you can, you're potentially creating a mess. Because if you're sending Bitcoin to a wallet, that's not a taxable event, but you still have to track that cost basis from wallet to wallet. So yeah, I guess to summarize, I would just say get on top of the tracking early, or like Trevor said, I think don't sell your Bitcoin, never sell your Bitcoin, as many people say. So
I love that. So the next question, which is, a good leeway from the last one, is what advice would you have for long-term Bitcoin holders?
On the tax side?
That's correct. Yeah.
Yeah. I mean, I really think Wyatt touched on it. Of course, buy it and forget about it is really the best strategy. And then if you need to tap into it, there are some of these loan products that are coming out where you might post Bitcoin, you get dollars out. I've actually even been introduced as of the last 3 or 4 months where you actually post Bitcoin, you get Bitcoin back out, which resets your cost basis. And then you can do with that Bitcoin what you need to do with it to potentially get access to dollars or your local currency. But I think the main thing is just trying to only put into Bitcoin what you are happy with holding on to, for the long term. And then if Bitcoin appreciates to a point where, you are able to take out a small portion of in the way of a loan to fund some lifestyle upgrade and pay, like Wyatt said, like a low cost of capital for the opportunity to do that, then that's kind of best case scenario. But I would say we're still very early in that, right? I mean, interest rates on some of these loans are 10, 12, 13% annualized. And so I still think it's probably prudent to try to only put into Bitcoin what you're willing to hold for the long term. So think in decades kind of thing, right?
Absolutely. You got to have a long-term preference in there. So what would you say is the best way for businesses to account for Bitcoin received from customers?
Yeah, so there's a few options. Again, biased. Right now, we're building out Bitmint, which essentially is a QuickBooks tool where your bookkeeper would track revenue coming in the door as revenue when it hits the P&L, and also tracking that as cost basis events as it comes in, and is tracking it to the USD value. Other tools that are out there that we've used in the past, Coinly, CoinTracker, they are more crypto native, and so my big beef with them is generally their developers are having to focus their time so much on all the different cryptocurrencies, every one under the sun, that I feel like in some ways the actual core product, which is the actual tax reporting and the cost basis schedules that they're supposed to be putting out, I've just seen that it's difficult for us to actually rely on those. And then the last thing I would say is, specifically from a reconciliation standpoint, there's really no way for us to rely on those, because there's no Bitcoin bank statements natively built into the system for us to reconcile back to. It's definitely nothing USD denominated on something like the Block Explorer. That was one of the other big reasons why we developed Bitmain, was to create these on-chain Bitcoin bank statements that could be used to send over to a lender, an auditor, or could be used for bank reconciliations on the business bookkeeping side.
All right, thank you for that. The next question is, what if someone gets Bitcoin as a gift? How are they supposed to file their taxes in?
Yeah, that's a great question. So generally, you receive it as a gift. As long as the same gift rules apply with Bitcoin as anything else. So I believe the annual exclusion right now is like $17,000 per year per person. So those are still the same. Those are still the same rules. And then again, you would just be tracking your cost basis when you receive that.
Okay. And then the next one is, if someone is mining Bitcoin at home, how would that be taxed? And also, what if they get a block reward? How would they be taxed in that case?
A block reward, basically like they mine a block. Is that what they mean by that, or something different?
That's right.
Yeah. Okay. So Bitcoin mining right now is treated as, we're trying to actually work with some folks in DC to do the dirty work on the lobbying side to get this changed. But right this moment, Bitcoin mining is treated as ordinary income when you receive it, and at the USD value you receive it. If anyone ever, if you heard about any of those NFL players back in like 2021 who were taking some or all their salary in Bitcoin, they're getting taxed on the USD value when they receive it, right? Even if Bitcoin goes down or goes up, whichever way it goes, you ping that revenue to the dollar conversion rate, say intraday or day of, whatever, how specific you would like to get. We generally, I mean, the blockchain allows us to see a second, down to the second on the blockchain. So we generally try to get pretty specific, but you could take an average on a day and be fine with that. But yeah, you take the mining revenue at the USD value, you mine it, and then you're able to take any expenses, since it is a business, against that. So if you needed to, you generally have to spend dollars to pay for electricity in order to power the mining machines. You had to pay for the actual ASICs themselves, so you depreciate those. And so, yeah, you would end up reporting that on a tax return. If it's just held by one person, the business is just owned by one person, you could opt to have it treated as a corporate structure or as just a sole proprietorship. You could create an LLC structure. You could create a partnership. So really, in a lot of ways, mining Bitcoin is very similar to any other business. The big thing is that you have to be tracking the revenue and expenses in dollars, even if you're actually earning in Bitcoin and even spending out in Bitcoin as well.
Okay, thank you. And then if someone inherits Bitcoin, what taxes can they expect?
It depends on how large the sum is. They just upped the exclusion. It's something pretty large. I want to say it's like $12 million per person. Don't quote me exactly on that, but it's somewhere in that ballpark. They just updated with the big beautiful bill. But all that to say, it's a pretty large sum. So for the vast majority of people, there's no taxes on inheritance. So you would get that as long as it's under that exclusion.
Okay, perfect. And then this question is from Patricia. She's saying, hi, Jordan, talking about data loss from exchange. Can we track our lot with the mempool if we do self-custody?
Yes, you can. The hardest part is so say you bought Bitcoin on an exchange and you left it there for 6 months and then you transferred it to your cold storage wallet. Well, all the data that we have is really just contained on chain in that scenario. We don't, and that cost basis is what you got it when you purchased, like what you purchased it at, not necessarily the USD value of when you transferred it over. And it gets a bit even more complex if you were buying on a consistent basis. Now you have multiple lots. And again, all of that data, we think about it as like it's off-chain data, right? We're not seeing those purchases actually on the Bitcoin blockchain. Those are kept at an exchange internal database to show like, hey, this customer purchased this Bitcoin. So all that to say, we've dealt with it before. It is difficult though, and does it create, there's some estimation, right? I mean, I've gone through someone's bank statement before where it's like, look, all I have is I can show you that I sent X amount of dollars out of my fiat bank account to this exchange. But we can't get granular enough to actually show which purchases at which date for what amount of Bitcoin, right? I can just show you this amount left at this date, and then this is what came into my on-chain wallet. And then you've got to make some assumptions, and there's some negotiation there if the IRS is auditing you to say, hey, what are your specific lots? So I would say those are very tricky situations. There's just no way around it because obviously the blockchain itself is public, but the internal database for these different exchanges is definitely not public. And if they've gone offshore or they've gone out of business, it's a bit of detective work.
Awesome, Jordan. Thank you so much. And this is the last question. What if someone were to lose their Bitcoin on a boating accident? What are the tax implications on that?
Yeah, so you generally would just take that as a loss, and then you would it's a little tricky because of course you could see how it could be abused, right? But I would actually have to look into that. I don't know that off the top of my head because I know how it would be treated in practice, but again, I think everyone could see where my head goes, where someone could say they lost it, right? And where does it actually go? So I don't know, that question may have been a joke, but if you actually do lose your Bitcoin, you are able to capture the loss. The main thing would be proving that you actually lost your Bitcoin. So like if it moved, for example, from one wallet to the next, then you might have trouble proving that in a tax court.
All right. Well, thank you so much, Conrad.
Yeah, everyone, thank you so very much for sticking around to the end. Thanks everyone for asking questions, and a huge shout out to Wyatt and Jordan. You guys delivered some killer insights. I learned a lot on this presentation, and I'm sure everyone watching and also the folks that tuned into the stream, because we had some great numbers on the stream. Thank you to everyone who's tuned in on Twitter and YouTube and wherever else where we may be live. Stay tuned on Twitter. We're going to share that tax loss harvesting article that Jordan was mentioning earlier. And I'll also make sure for everyone who got an email invitation for this webinar that you'll have links for Wyatt and for Jordan's businesses, as well as the tax loss harvesting article to review. And as well, this meeting is being recorded, so we are going to be able to share that meeting with everybody as well. And anyone who tuned in maybe late on YouTube, check out our YouTube channel. We're going to upload this full stream should be available for you there, so you should be able to check that out as well. Thanks again so much for everyone that tuned in. We're going to have another one of these. We have a monthly Bitcoin for Beginners webinar. Our next one is going to be after Christmas, kind of around the new year. It's going to be a bit of a year-end special, so stay tuned for that. We're looking forward to hosting you once again. Thank you so much, everyone.